All right. Good evening. Can you see my screen? Can you see my screen? So let's go ahead. If you can see my screen, that is fine. And today in our class, we'll be talking about cryptocurrency 101 for beginner. So this is a course that are, made specifically for, beginners, investors, those that are wishing to invest in cryptocurrency. If you are wishing to invest in cryptocurrency, this is a course for you. Mind you, I'm not talking about trading, I mean investing in cryptocurrency. So let's move on. So what is the course all about? This course is designed to teach you all you need to know about investing in cryptocurrency. The objective of this course, by the end of this course, you are expected to have an overview of what cryptocurrency entails and how to start investing in the crypto space. So these are the things we are going to be looking at today. We'll look at, we'll discuss and look at the introduction to cryptocurrency. What is blockchain technology? What is crypto mining? It's a very popular word. So we'll look at that. We'll look at popular cryptocurrency by market cap. What detects the value of cryptocurrency? What makes cryptocurrencies to go up or what makes it to come down? So we'll discuss all of that. We'll look at crypto wallets. We'll look at the different platforms we use to invest in cryptocurrency. Look at risk of investing in cryptocurrency. Also look at due diligence research for cryptocurrency is very important. Some people are always investing in something they don't know. So I will give you, an overview of how you can do your due diligence before you invest or your research before you invest in cryptocurrency. We look at the meaning of white paper. What is white paper? We look at what are tokens, initial coin offerings. Also look at timing the market, crypto index fund for those that wants to invest in crypto index fund. So we look at the few index fund for cryptocurrency. Then we also look at fees and commissions that the various exchanges charge. Then finally, quick Q&A session. So this is my background. My name is Desmond. I am an entrepreneur, investor, thought leader. I have 4 years of investing and trading experience. I've been actively investing in real estate, cryptocurrency, stocks, and what have you. I believe so much in learning the fundamentals of trading and investing. I highly recommend investing as a way to build wealth. So going forward, cryptocurrency is a digital or visual currency that is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. Many cryptocurrencies are decentralized networks based on blockchain technology. A blockchain technology is a distributed ledger enforced by a disparate network of computers. A defining feature of cryptocurrencies is that they are generally not issued by any central authority, rendering them theoretically immune to government interference or manipulation. What I mean by that is that cryptocurrency is not being manipulated or regulated by any government or any agency. It's decentralized. By decentralization, I mean that everybody has equal power. Yes, it's not being regulated by anyone, it's being regulated by everybody. You get, so you have access to, this technology, you are the one regulating it, the people using it are the one regulating it, and what have you. So that's what I mean by decentralization. Centralization means a group of persons or a government is in charge, is regulating it. But by decentralization, I mean it's decentralized, it's not being regulated or interfered or manipulated by the government. So the first cryptocurrency is Bitcoin. And Bitcoin was created in October 28 in 2008 by a man called Satoshi Nakamoto. And it was launched officially on January 3rd, 2009. So let's try to look at what is investing, since we're talking about investing. So what is investing generally? Investing is allocating resources such as capital with the expectation of generating a profit. This can include using money to fund and kickstart a business or buying of land or digital assets with the goal of reselling it later at a higher price. Are you following? So what investing basically means is that you put your money, you allocate your money to a particular business or project, either buying of land, um, as in the case of real estate, or buying of digital assets. Now, the purpose of you buying that thing is for you to make profit. Okay, so that is simply what investing means. Is the allocation of resources. You allocate your resources with the goal of, or the expectation of what generating profit. Moving forward, crypto investing, therefore, is the process of buying a crypto asset like Bitcoin and or Ethereum with the goal of selling it at a higher price. Mind you, I told you from the beginning that we'll limit our discussion to investing. So we are not talking about trading. Trading is very different. It's different from investing. In trading, there are a lot of techniques, strategy, and and principles you have to apply. But when you are investing in cryptocurrency, you just buy. Usually, you buy when it's low and sell when it's high. So going forward, we are going to try to define what blockchain technology is. So blockchain technology is a system of recording information in a way that makes it difficult or impossible to change, hack, or cheat the system. A blockchain is essentially a digital ledger of transaction that is duplicated and distributed across the entire network of computer systems or the blockchain. So what I mean is that what I mean is that the blockchain is is a system of information, is a system of recording information in a way that is very difficult to change or hack the system. It's a ledger, a ledger. In a traditional system, you can have a book like a ledger where you record your information. So the same is with blockchain. So you use the blockchain technology to record all the transactions, that is added, the existing transaction or the new one that is being the transaction or the information that is being taking place from the inception of cryptocurrency. So basically, when you talk about block, you are referring to a block of information. So when you talk about chain, you are talking about a new block of information which are being added to the existing sequence of blocks or a chain of blocks. So let me show you an example of what I mean. So you can see here, this is blockchain technology. This thing you are seeing like boss here is the block that I'm talking about. So this thing here that you are seeing that connects this boss to this other one, this one to this other one, is the chain. So all these are all information that connects one bus, one block to another. You get, unlike the traditional ledger, which is very easy to cheat. You can cheat the system, but here blockchain, you can't cheat the system. It's very difficult, like I've said earlier. It's very difficult and nearly impossible for you to cheat the system. So let's move forward. So what is crypto mining? This is a competitive process that verifies and adds new transaction to the blockchain for a cryptocurrency that uses the proof of work method. So let's look at it this way. Usually we have the miners. If Okay, let me give you an example. If you are from Nigeria, there is gold in Nigeria, specifically in the northern part of Nigeria, Zamfara. People do go and mine gold. The same, look at it like the traditional way of mining. But in blockchain technology, in cryptocurrency, you don't actually dig anything. You use a sophisticated computer system to mine a crypto coin, to mine the coin. Okay. So the miners gets rewarded with some amounts of the currency and or transaction fee. So let's talk about popular cryptocurrency by market cap. Okay, you can find this at coinmarketcap.com. So I take the first 10 cryptocurrency by coin market cap, market capitalization. So I took this from the coinmarketcap.com. So it's a website that you can go and get information about, cryptocurrency and what have you. So the first one I have here in my list, the 10 most popular cryptocurrency by market cap is Bitcoin, which is the first cryptocurrency and also the most popular. So we also have here Ethereum. We have, I think the price of Bitcoin now, now that I'm recording this video, is $36,000. $36,000. And Ethereum is $2,000 or thereabout. Then Theta, we have BNB, that is Binance and coin. We have the USD coin, which is the USDT. We have the Cardano. We have Solana. We have the Ripple. We have the Terra, and we have the Dogecoin. And the reason why I choose this 10 is because these are the most popular cryptocurrency by market cap. And we have over 500 crypto coins now that is in circulation. And it is said that most of those crypto projects, a lot of them are going to die and a lot of them are actually scammed. So you have to stick with the top 10 or maybe top 20 by market capitalization you get. So let's move on. So here we are going to talk about what detects the value of cryptocurrency. What makes cryptocurrencies to go up? Get. So usually in economies, there's what we call supply and demand. So demand for a particular coin or crypto asset makes it to go up. So when there's a lot of demand for it, the price or the coin tends to go up. Yeah, so sometimes it's caused by speculation, just like in the case of Dogecoin. There was a time that Elon Musk, the richest man on earth, tweeted that he just purchased the Dogecoin. So people started rushing, started buying Dogecoin. So that makes the price of the Dogecoin to go up. So also utility also makes the price of the crypto, particular crypto, to go high. So by utility means the number of people that are using it, the level of acceptance you get. So that is what makes a coin or a digital, a particular cryptocurrency to goes on. Also, the importance, like for instance, now you see like Bitcoin and Ethereum, they are very, but particularly Ethereum, you see that Ethereum is gaining more popularity because of its importance. You know, it has a white paper and is built on a very good and robust um, technology. So the importance too makes um, detects the value of that particular crypto asset. So what are crypto wallets? The crypto wallets are software linked to the blockchain that monitor and execute crypto transactions. So they are like a personal bank account for cryptocurrency. So for example, if you want to save your money in your bank account, you approach your traditional bank, they will open an account for you and you deposit and transfer your money. In cryptocurrency, it's called crypto wallet. You know, that wallet is like you look at like your traditional bank account. You know, the wallet is linked to the blockchain. You know, it helps the blockchain to monitor and execute the crypto transaction. Remember, I said earlier in our definition of blockchain technology, I said that it's a system of recording information. So any transaction that takes place is being recorded in the blockchain. So hope you are following. Now, to truly own cryptocurrency, you need to own wallet, a wallet that have keys that represent a unique digital ID. Examples of crypto wallets are you have the Trust Wallet, and there are different types of crypto wallet. We have the decentralized and the centralized wallet. So the decentralized, when you talk about the decentralized, you talk about the Trust Wallet, the MetaMask wallet, and what have you. Then the centralized wallet, we talk about, like uh, the different platforms like the Binance Exchange, Coin Exchange, Luna, and what have you. So basically, the wallets, the crypto wallets, we are going by what we have is Trust Wallet, we have Ethereum wallet, we have the Bitcoin wallet, we have the MetaMask wallet, etc., etc. So platforms for investing in cryptocurrencies. We have the Binance Exchange, which is the most popular exchange in the whole world now. We have the Coinbase, since Coinbase is the second most popular. We have Luno, we have KuCoin, we have Patricia. That is Patricia, and Luno is for for those that are Nigeria, you can use Luno, Patricia, and what have you. Then the Binance Exchange supports P2P, that is peer-to-peer. Because currently, if you're from Nigeria, there's a ban on the there's crypto ban. So you can transfer money directly from your exchange to your account or from your account to your exchange. If you do that, there's a penalty. Your account will be frozen. So usually you use the peer-to-peer. You transfer to someone, then the person then release your crypto to you when it confirms the money. Usually the exchange or the person's crypto on what is called the escrow wallet. So when you want to buy crypto. So you transfer the money, then the person's company then releases, then Binance will then release the money to you. But for Luno, Luno is not like that. Luno, they have what we call voucher. Gosh, I wish I can show you that now. Maybe I will show you that in our next lecture. We have what we call voucher. You create a voucher, then you continue the process. When you make the transfer, you click on transfer this money, you go to redeem and follow the process and what have you. So, Patricia too, they have P2P, peer-to-peer. So for me, I use Binance and these are the two exchange that I'm using. But I have Patricia too, but I am not using it as much as I am using Binance and Binance too is a very big exchange. In Binance, there are lots of things like you can trade crypto in Binance. That you have you can trade the futures on margin on you can trade I mean sorry to say you can trade cryptocurrency in Binance. That's what we call future trading and margin trading in Binance. So you can also buy your NFT, which is another emerging uh, emerging stuff in the digital space. So you can also buy your NFT. That is the non-fungible token from the Binance platform. So if you wish to use this Binance platform, I'll send you a link, or you can go to Play Store, you download it, sign up, put information, put a strong password, you complete your KYC, know your customer, and what have you. The same thing with Luno, Patricia, and the rest. Okay, so I'll leave a link on the description below. So going forward, the risk of investing in cryptocurrency. What is risk? It's important for you to understand what risk is. You get, because in as much as you can make money in cryptocurrency, you can also lose your hard-earned money. Me too. So it's 50-50. You can lose, you can also make, depending on you get. So what is risk? Risk is a chance that your actual outcome will differ from your expected outcome. So let's say you, let's say you are buying Bitcoin at the present price now, that is, let's say $36,000. Now you buy one Bitcoin at $36,000. The price of Bitcoin can go down or it can go up. So that is risk. Okay. So your expected outcome is different from your actual outcome. So you are following. Risk includes the chance of losing some of all of your investment. So usually risk is equals to reward. Cryptocurrency is still a very speculative market. Therefore, short-term price movement of even the most popular and well-established cryptocurrencies like Bitcoin are volatile and erratic. So that is why most investors or investment experts will tell you that don't invest in amounts that you cannot afford to lose. So you should always start with the amount that you can afford to lose, because cryptocurrency is very volatile, okay? And also is the speculative market is still evolving. So if you invest with what you can afford to lose in case things go wrong. So there is a probability of losing your investment. So always apply caution when you are investing. Going forward, so before you invest in any digital assets like cryptocurrency, like any currency, you have to do what we call due diligence. You have to research for the cryptocurrency. Usually, you have to investigate, you have to audit, you have to do your assessment of the business or an asset that you are thinking of investing in. So this applies to your business. If you're planning to open a business or sell, usually you investigate the business to find out, to assess the business that you want to invest your money. The same thing applies to cryptocurrency. You do your research because there are some coins, there are some um, projects, crypto projects that are scam. So you have to do your research, filter out, uh, to filter out the negativity from it. Okay. So always do your due diligence or research before you invest. Also, always take the time to fully understand anything you are investing your money in. Reading of white paper. A white paper is a document released by a crypto project that gives investors technical information about its concept. I repeat, a white paper is a document released by a crypto project that gives investors technical information about its concept and a roadmap for how it plans to grow and succeed. So we can look at a white paper like a business plan, like a business plan. So a business plan provides the investor, with the idea of what your business is, how you intend to make profit in future, and how you intend to succeed to get. So in cryptocurrency, it's called white paper. So you read the white paper first, before you invest in any cryptocurrency. There are some cryptocurrencies that doesn't have the white paper. You get, there are some that has. So you look at that. When you look at it, it gives you, technical information about the concept of, the whole stuff and all of that. So usually the white paper is a document created by the creators of the crypto to help sell the crypto. So this white paper is the document and it's being created by the creators of a particular um, cryptocurrency, to help them sell the crypto. It includes facts, diagrams, statistics, and quotes. When you look at, just like the business plan, it has structure. So the white paper too also has structure. You start with the abstract, go down to the introduction. We talk about the white paper also contains the technology, that is the transaction tech, the mining tech, and the network tech. These all the different technologies they use to build a particular crypto. Then we talk about the incentive, how they plan to reward, investors. We talk about the nation plan, conclusion, and references. So these are basically what the white paper contains. So you can go online and find out, like in the case of Ethereum, since the website is ethereum.io/white paper. The same thing with Bitcoin. So you can go ahead and read the white paper, if you're applying to become a crypto investor. So what are tokens? Tokens are units of value that are issued by crypto startups that represent pieces or shares of the crypto network, sold for fiat or cryptocurrency to raise money for startups. Let's say you want to start a business and you don't have money, to grow your business. So usually what companies do is that you sell shares, to members of the public, so they will buy these shares. When they buy these shares from you, the money you use it to invest in the company. So these shares they buy from you gives them the rights to own a portion of your business. The same thing applies to crypto. So when you when a crypto creator, when they don't have money to fund their project, they can issue tokens. They issue tokens. You get, when you buy the token, you become a part of that crypto project. But there are lots of risk involved in buying tokens from most of those um, crypto network, because most of them die. Some of them dies at arrival, while some dies within 1 year. What have you. So you should always be careful. Okay. So the types of token, we have equity tokens like digital shares of the company. I just explained. We have utility tokens, provide a certain privilege or opportunity to its owners when using the platform. Assets backed token provided by a real commodity, real estate, diamond, and what have you. So you can go back and research and read more on all these things. So what are initial coin offering? Crypto company launch ICO, that initial coin offering, to raise money to create new coin, app, platforms, or network, just like what I've explained earlier. So they raise money through the initial coin offering, to create new coin, app, and platform or network built, network. So the IPO of the the um the ICO is like IPO. In the stock market, we use the word IPO, which is initial public offer. But in crypto, we use ICO. So when you think about ICO, you can relate it to IPO, which is initial public offer. So initial public offer is basically used by companies, a term that is basically used by companies, and they want to go public. You get, but in crypto it's called ICO, initial coin offering. So don't forget about that in mind. So ICOs are risky, like I told you, they are very risky because most of those projects don't usually go far. So timing the market. Usually in trading or in investing, there is what we call technical and fundamental analysis. If you're a trader, you understand what I mean better. So a technical analyst is a person that bases decision on the price movement, the price movement of the market, while a fundamental analyst tends to look at bases decision on news, and what have you. So if you are investing crypto, in the crypto space, usually you buy low and sell high. So that is the strategy, to buy low and sell high. You wait until the market goes up before you sell. Alternatively, there's what is a principle, a strategy that is called dollar cost averaging. This year, dollar cost averaging. Dollar cost averaging is a strategy that investors use to buy a particular asset either monthly or quarterly. For instance, now if you are using this strategy, the dollar cost averaging, when a particular, if you are, if, like, let's say you want to buy a particular crypto asset monthly every month, so you can use this principle, the dollar cost averaging. Is you have it in Luno, you have it in Binance, and the other exchanges too. So the platform will be buying cryptocurrency for you, with that particular cryptocurrency when it's being activated. When this um, uh, when you activate auto invest, so the platform will be buying that particular cryptocurrency for you every month and at that particular date. And then so you make sure that you have money in your wallet. Get so for now, for me, I will advise you go with this, as a beginner investor, since if you don't have any knowledge of the technical and fundamental analysis, I will advise you go with this dollar cost averaging. You get, or alternatively, you can always look at that chart maybe every month. I want to advise you as a beginner to, just put all your money in few there. So when you put all your money, when you invest all your money in a particular cryptocurrency, when the thing goes down, your money can lose half of your money of your investment. So you invest, maybe you can split the money into four or into three. Then you invest, then you wait. Maybe the market goes down again, then you invest. Then when the market starts to appreciate to go up, then you invest in many parts of the money. Because so it's a strategy. Mind you, this is not a financial advisor, it's my personal opinion. So don't go and say, and that's one say it is, therefore I will not be held responsible. So always do your due diligence, research, read more, learn, study, you get, before you undertake any financial risk. So going forward, crypto index fund. So I will define an index fund as an investment fund, mutual or exchange traded funds that follow certain rules. So if you are interested in long-term investment without a strong emphasis on research, look to Crypto 20 Index Fund. So Crypto 20 Index Fund is an index fund that I can remember now. So usually this index fund has a combination of different and different funds put together. You get, so when you are investing in index fund, you don't have to bother yourself with too much of research and what have you. You get, so because it's a combination of different investment funds put together. Okay, going forward, we talk about fees and commission. So fees and commissions varies. You know what fees is. So if you are using a particular exchange or platform, if you are buying any crypto asset with a particular exchange or platform, you are expected to pay a fee and or commission. And this commission varies depending on the exchange you use or you're using. So whenever you buy or sell a digital asset, you are expected to pay a certain amount for using the platform. Yeah. So some platform they pay as low as 0.01, some they pay like 0.1, some you even have 1% have to pay like 1% for buying or selling. Some you even pay as high as 2% on what have you. So I thought it wise to inform you. Get, so that is that. Question and answer. So let me show you uh, let me show you a chart. Let me show you a chart of of, of BTC. Okay, this is the chart of BTC, and you can see as at the time I made this analysis, this is a Bitcoin price chart. So as at the time I made this analysis, the price of Bitcoin was $38,000. The $38,364. And you see that from May 2020, the Bitcoin price was very low. Was low. I think it was around 12,000 or thereabout, $12,000 thereabout. Then from 2020, it now went up because it went up. I think this is the higher highs. That's 658. We went as high as $58,000 and now came down. So currently the price of Bitcoin is at 36,000. 36,000 today is $36,000. So from analysis here, you can see that I I think that the price of Bitcoin will probably come down to test this level, this support level, then before it goes up. It may probably come down to 29 to $27,000 before it probably goes up. But be that as it may, it can get to these points, 32,000, consolidate and then goes up. You get, so the market is very hard to predict. So you get, so that is that. We are come to the end of today's session. Thank you very much for participating.